In this video, I will be discussing with you what I call market sentiment overview. This discussion is really going to change the game for you. I want you to pay close attention because, in fact, somebody asked in the comment section of one of my videos that I should present a video or come up with a video on how we do our optimization and our identification protocol. Now, what I will be discussing with you in this video is going to give you like a summary cap or overview of what we do when we say we do identification protocol and optimization protocol. And of course, the discussion is very closely related to the discussion or the concept of capital flow narrative. So you want to really pay attention to what I'm going to be discussing in the video. In fact, as a matter of fact, because I want you to really get it, I'm going to divide this video into two parts. Because we have four different types of market sentiment overview. So I'm going to divide it into two parts. I'm going to capture the first two market sentiment overview in this first part of the video. And of course, I'm going to now release another video that will be part two of this one, where I will discuss the second or remaining two market sentiment overview. So our discussion is market sentiment overview. This is very crucial. As a forex trader, you want to really understand what is the storyline behind the sentiment in the market. And as a matter of fact, this is what gives the global overview of the financial market, especially the forex market in this context now, anytime, any day. So before you trade at any point in time, you need to ask yourself, what is the market sentiment overview for this particular season? So, and we have four different types. I'm going to itemize them. Then I'm going to now discuss the first two in this video. Now, the first one is types of market sentiment overview. Number one, you have risk on sentiment. Number two, you have what I call risk on dollar aversion sentiment. Number three, you have risk of sentiment. Number four, we have risk of cent, uh, dollar aversion sentiment. I want you to pay close attention to all that I will be discussing in this video. What is going to really stand out for you if you can really understand this discussion is that in each of these different market sentiment overview, I'm going to identify uh, the currency or commodity, because I will include gold now into my discussion, from where capital will be flowing out of and where capital will be flowing in of, during each of these market sentiment overview. So let's pick the first one. I want you to really follow me, and if you can really take your time to understand this and now look at the market, per time, to now see how these currencies behave based on each of the market sentiment overview, you will now understand why capital is flowing from some set of currencies or commodity at a particular time, and while it will be flowing out of those currencies or commodity at another time. So the first one, which is going to be the first I will discuss here, is the risk on market sentiment. Risk on market or risk on sentiment. Let me just put it like that. What does this mean? This risk on means that in the investment environment, investors, they are really positive about the standpoint of the investment environment, and they have the tendency to put in a lot of investment position, because they have overviewed the global economy and they realize that there is no unexpected event, whether at a regional or global economic standpoint or political standpoint, that can alterate or that can, unexpectedly shift their projected return on investment. And this is what happens when there is no tension, on a global scale, whether from the angle of politics or whether from the angle of natural disaster or pandemic or war, when there is a level of stability globally now. What we are looking out for, or what market sentiment overview focus on, is the global stance of the investment environment. You see now, and that is why it's very important for you to really understand some of the concepts that makes, professional or professional traders professional traders. You see, capital flow narrative is the first thing you need to strike out before you begin to analyze the market. And in capital flow narrative, we have the fundamental storyline, we have the sentiment storyline. The last one is the technical storyline, and that is what a lot of traders now focus on, leaving the fundamental storyline and the sentiment storyline. In this video, I'm going to really analyze or help you to have a grasp of the sentiment storyline, when it comes to capital flow. So when you notice that the market environment is in a risk on, in fact, as I'm discussing this, you will be asking now, how will somebody now know that the market environment is in a risk on? At the end of this video, I'm going to show you or come up with list of index that you will get, that will help you to gauge. This information I'm giving is more or less a premium information, but I feel that if we are building a community of traders, we should be conscious of helping them to start the journey from a professional standpoint. That is why I'm giving this information. I want you to pay close attention. So I said at the end of this video, I'm going to itemize index or some indices that will help you to gauge the sentiment of the market per time. Now, risk on means that investors, they are ready to risk their money in the market. By implication, there is no panic. There is no unnecessary fear in the market. So, nothing is coming up in terms of war or, in terms of political tussle, across countries like that. So, it means that capital will be flowing from certain currencies into certain currencies. And I'm going to identify, this group of currencies. I want you to pay close attention. Before now, I've done a video on capital or currency grouping. And in that video, I discussed that we have three major groupings of currencies. We have number one, the high yield commodity currencies, which include the Australian dollar, the New Zealand dollar, and the Canadian dollar. Those are the group A. You might need to look for that video on this channel so that you can really sit down with it and understand currency groupings. So now we have group A. These are high yield commodity currencies. Now we have the group B, which are low yield safe haven currencies, and these include, among other things, the US dollars, the Swiss franc, the Japanese yen, and of course gold. These are safe haven assets and they belong to group B. Now the group C is what I tagged as dollar aversion currencies, and this include the euro and the GBP, which is the Great British pound. So now in this discussion now, I'm going to identify, currencies out of which capital will be flowing during a risk on sentiment, and currency that will be accepting or will be receiving that flow. So I say that for current risk on sentiment, we have we have capital outflow. Where will capital be flowing out of? Capital outflow. Where will it be flowing out of? Like I said, I've explained that risk on means that there's no panic in the investment environment. There is no fear. There's no unnecessary event that is shifting things or that has the tendency to shift policy. So investors, they want to really invest. What that means is that capital will be flowing out of safe haven currencies. Now, which include Japanese yen, JPY. It includes CHF. It includes United States dollars. And of course, okay, this is number 3, US dollars. Then number 4, you have gold. When there is risk on, okay, let me say, let me just remove this, because at a point when there is risk on, if the United States, economy is performing, an average investor want to invest in the United States. So during a risk on sentiment, or when the market sentiment overview is risk on, predominantly, I want you to underline this word predominantly, so that it will help you to really understand it, not from just a passing information, standpoint. You really need to understand it, that what we are looking out for is the predominant flow of capital. So during a risk on sentiment, there is going to be an outflow of capital predominantly. The market moves up and down. So it's not as if the capital will just be showing you a flow out like that. But on a predominant level, capital is expected to flow out of the safe haven currencies. Are you getting it now? Now, I remove US dollars from this outflow because there is a concept called the safest safe haven, or safest safe economy, or the safest economy. And if there is risk on, investors will look at all the economies of the world. They will be looking at which economy can I invest my money that will yield the best results based on the performance of the economy. So in a risk on environment, capital will flow out of other safe haven, with the exception of dollar, and capital has the likelihood to still flow into dollar as it's flowing out of other economy. You remember that all these currencies, they mean largely economies. Like Japanese yen is Japan's economy now. It means capital will be flowing out of Japan's economy, because in most cases, safe haven assets, they have very low yield. You get it now. And of course, people buy gold because if there is panic, they want to store their capital in form of gold, just to hedge against any form of unexpectation in the market. So capital outflow will be largely away from Japanese yen, Swiss franc, gold, which is number 3, and you will see this now. Euro capital will also be flowing away from euro and Great British pound. I want you to take note of this particular grouping, is very important. So by the time you evaluate your market sentiment and you notice that we have a risk on sentiment, it means that you want to look at currencies including Japanese yen, Swiss franc, gold, euro, and GBP. If you look at them very well, I might not be able to go to the chart now because I really want you to understand this deeply, so that you will now go to the chart and begin to overview yourself. Are you getting it now? But largely, capital will be flowing away from these currencies and assets when there is a risk on. The reason being that people or investors, they want to move their capital into commodities or economies with high yield, return. Are you getting it now? And remember that I mentioned that euro and GBP, they are dollar aversion currencies. So when there is inflow into dollar, to a large extent, that inflow, into dollar will cause euro and GBP to experience outflow of capital. Are you getting it now? So now we have dealt with the outflow. Let's look at inflow, capital inflow, because this is the focus of market sentiment overview. The major thing you want to track when you discuss market sentiment overview is capital flow. Where is capital flowing out of? Where is capital flowing into? So during a risk on market sentiment, capital, like I said, will be flowing into United States dollars, provided you know that it means that the United States economy is performing now. So people want to invest in the United States economy. So capital will be flowing into Australian dollar, capital will be flowing into New Zealand dollar, and capital will be flowing into Canadian dollar predominantly. And this is because these assets, they are high yield currencies. They are high yield commodity currencies. In fact, the AUD, the New Zealand, the Canadian, they are commodity currencies, and they have high yield, tendency to yield higher return for investors. So an investor can move his capital from Japan, borrow money from Japan at 0.5% interest rate to invest in the Australian dollar with maybe 3.5 interest rate. Are you getting it now? So because it is expected that Australian dollar will yield higher return, during a risk on sentiment. Do you get it now? So this is number one market sentiment that you need to take note of. The second one is what I call risk on dollar aversion sentiment, and I'm going to really quickly discuss that too, so that I want to wrap this video. I don't want it to be too long, and of course I will do the second part of this video so that you will now understand the risk of sentiment and the risk of dollar aversion sentiment. So number two now is what I call the risk on dollar aversion sentiment. Interestingly, currently, today is 10th of September 2025. Currently, the market sentiment overview is risk on dollar aversion. Today being the 10th of September 2025, the current market sentiment overview is risk on dollar aversion. Now, I want you to follow me closely now. Our focus is, if this is the risk on overview or market sentiment overview, where is capital flowing out of predominantly? Just like the first case, let's see, where is capital flowing out of? In this case now, I want you to note this. Dollar aversion means that investors, they have lost confidence in the stance of United States economy, or they lose confidence in dollar, US dollar now, United States dollar. So capital will be flowing out of the US dollar during a risk on dollar aversion sentiment. And if you are a forex trader or you are an investor listening to this, you might need to just go to your chart, go and look predominantly at the dollar index. You will notice that there is a downward movement on the dollar index, and that is proving to you that capital is flowing out of dollar, US dollar, because investors, they have lost confidence in the stability. Now the focus is stability. Investors, they want to look at which economy is stable. If an economy is not stable, probably because of the political leader, he can just come wake up one day and come up with a particular decision that might not really go well on the long run with the economy, investors don't want to risk their money because once the policy shift, there's nothing they will do. If it shifts in their disfavor, they are going to lose their money. So currently, the tone of market sentiment as of 10th of September 2025 that I'm recording this video, the market tone is risk on dollar aversion. And of course, when that is the case, you will see that largely capital will be flowing away from JPY. You see this now. You might need to go and still check this. Capital will flow away from JPY. The question is then where will capital be flowing into? Now let me quickly itemize those so that you will understand capital inflow. During a risk on dollar aversion sentiment, like I said, for the first type of sentiment, I said euro and GBP, they are dollar aversion currencies. So when there is dollar aversion, capital will be flowing into euro, capital will be flowing into GBP, capital will be flowing into, of course, we have a ton of risk on in the market. Now, capital will be flowing into the high yield commodity currencies, which include the Australian dollar, the New Zealand dollar, and the Canadian dollar. Don't forget, because gold is also quoted in US dollars and there is dollar aversion, gold during a risk on dollar aversion sentiment capital will be flowing into gold. In fact, if there is any slight tendency of maybe a policy in an economy during a risk on dollar aversion, you will see gold pumping. The reason is because there is dollar aversion already. Now, if there is any tone of maybe any form of unexpected shift in policy, gold is going to respond to it very fast during a risk on dollar aversion sentiment overview. And this is how you understand what market sentiment overview means in the context of capital flow. So it means that during this time, until further notice, the likelihood of, if you pair a currency from here now, GBP, if you pair it with USD, during this risk on dollar aversion sentiment, the likelihood that GBP USD will be buying is very high. And that will be the capital flow narrative. I'm still going to release a video where I will discuss capital flow narrative in depthly so that you will understand. But because I don't want this video to be too long, like I promised, I said if you can stay to the end of this video, I'm going to itemize indices or some index that will help you to gauge the risk or the sentiment of the market per time. And the first one that we itemize, sentiment gauge. These are indices. You want to look at S&P 500. S&P 500 index. You want to look at NASDAQ composite index. You want to look at the Dow Jones Industrial Average Index. You want to look at the S&P 500 Volatility Index. You want to look at the DXY. This is very important, and of course, by the time you begin to overview these indices, you know, you'll be able to track what is the risk sentiment, or do we have dollar aversion. In this case now, if you want to know, if you want to use these indices, although I'm still going to give, come up with another video that will explain this, but these are just the list. Don't let me, so that this video will not be too long. In a subsequent video, I'm going to explain how to use each of these gauges or gauge to track the market sentiment of the market per time. But I've given you, you can go and do your research to see, when the S&P, let me quickly say this, when the S&P 500 index is buying, what that means, or let me say, if you have a market structure that is bullish on S&P 500, it means that the investors, they are ready to risk their money. And that is what we track the risk on sentiment, you know. But in that video that I'm talking about, the way I will explain sentiment gauges in the forex market, I will really explain how you can track it. Remember, most of the information, or the information I'm giving, especially in this video, they are premium. If you have the privilege to listen to this, you want to really listen to it carefully and understand. This is a product of 6 years consistent research. So it's an information that, ordinarily I'm not supposed to let it go for free. But then our intention at Potential Miners International is to help as many struggling traders as possible. So if you come across this video and it makes some sense to you, you want to subscribe to this channel, you want to turn on the notification bell, so that if I release any video in anytime soon, of course, it might be that video that you have been waiting for that will change the game for you. And of course, you remember that I said this is just the part one of this discussion. I want you to stay connected. I'm still going to release the part two of this video, where I'm going to now discuss the market sentiment overview part two, identifying the risk of sentiment with the capital outflow and capital inflow, and the risk of dollar aversion sentiment. Till I see you in the next video, I remain Mr. Kimbonde, the king of waves. Thanks for listening. God bless you.